Okay, so we are going to do the Super Jumbo today. Are you excited?
Of course.
Yeah.
Being alive, just
So
being
super,
alive.
yeah, Super Jumbo. Talk about Super Jumbo, something like over $3 million loan. So had to be $3 and $1, $3 million and $1. $3 million still not Super Jumbo. Had to be $1 more than $3 million to be Super Jumbo.
Oh my God. A lot of loan.
Dude, that's a lot of loan right there.
Yeah.
That's a big monthly payment.
We can do all the way up to $10 million, by the way.
Oh.
So it's time for you guys to get to know all the rich people in the Bay Area.
Let's knock on their doors.
By the way, they need the loan. They
Yeah.
need it. You won't believe the rich people need this loan because it's so easy to get, and they don't even know about it. It's new.
Good.
Easy to get. I need it if it's easy to get.
It's easy because it doesn't require tax return W-2.
Wow.
Yeah.
What?
Can you believe it? A big loan like that? So you got to learn. Okay, who will need these loans? Doctors.
Lawyers. Doctors.
Lawyers. I think doctors are the one who need it most. Doctors, dentists, business owner.
Mm-hmm.
Look for those people and talk to them. You can go straight to them, talk about the products you have. You don't have to go around making friends. Say, hey, I'm a real estate agent. I have the program. You might need it, or your friend might need it. You say, what is it? I can get you a loan more than $3 million. I don't need your tax return. I don't need your W-2. All I need is your credit score 700 and above.
Wow.
They don't have to have like a proof of income for that much money?
We, for the business owner, we will go through what we need, but it's really easy. Okay? So today we talk about Super Jumbo, and we're gonna review the no doc loans, and we have Q&A later on. So Super Jumbo, we have 30-year fixed, and we have 7 one-arm. And you look at this one. For non-owner, N-O-O means non-owner. Non-owner property, that means somebody buy the property to rent it. That when they do the loan with us, they have to keep the loan for 2 years or 3 years, meaning they cannot sell the home within 2 years. They cannot refinance within 2 years. If they do, they have to pay prepayment penalty. Okay? So only for non-owner. But if it's owner occupied, they don't have to do that. Okay? We have 7 one-arm, and we have 30-year fixed. We don't have 15-year fixed. So we offer only 2 programs, so 30-year fixed and 7 one-arm. Again, for any property that's for investment, they have to keep the home for 2 years. Okay? So let's look at the loan amount. So when you look at this table, this is for, you have to read line by line, right? So this table is applying for actually 1 cent over, what is it? $1? Is it $1 over $3? $1. Okay. $1 over $3 million is the minimum loan amount. $1 over $3 million is the minimum loan amount, okay? Right now I have a $4.5 million loan.
Wow.
Refinance cash out. If I get that done, I have another $4.5 million, the same home, the same borrower. So I'm gonna do 2 $4 million loans, more than 4 million loans for one person. So there are people that need those loans.
That's crazy.
It's not like, oh, this is huge loans. Yes, there are people because their house. Think about it. You live very close to $6 million home, $10 million home. They are in Saratoga. Then Mountain View, they're Palo Alto, right? They're so close to us. And their house is 10 million, 6 million, 12 millions. And they need to cash out. Go knock on those doors, okay?
I had to get past the gate, the code on the gate first.
Okay. Anyway, you have to find a way to get close to those people because they need the products, but they don't know yet. Okay, so this is for purchase. That means somebody want to buy a property or somebody to refinance. This table right here, rate in term, that means to change the rates only. Okay, so this table also applies to own occupy second home investment property. If somebody buying a home or refinance rate in term, that means they only want to change the rates. So for the property type, it's a 1 unit. Single family home is qualified for this. A condo, a townhouse, 2 to 4 units is good. All right, look at the loan amount. By the way, this program is for foreign national as well. So some rich people from another country come over here, want to buy a $10 million home. As long as they have 40% down, we qualify them a mortgage. So that, or they can borrow a loan up to 10 million. So that means they can buy a home more than 10 million, right? As long as they have 40% down, they get a loan up to $10 million. So you know anyone that not in this country but very rich in another country? To give them a call.
I wish.
We don't even need credit score for foreign national, right? We don't need anything from them. See that? So, okay. So for the 1 unit, a condo and townhouse, if somebody borrow up to $5 million loan amount, they need 30% down payment, and they need to have a minimum. The middle credit score is 700. So credit score is very important for this kind of loan. And for the loan amount up to 10 million, we need a little bit more down payment. It's 35% down payment. And the credit score is also required higher, 720. Okay. For 2 to 4 units, the requirement of the down payment is higher. 45% down payment for a loan amount up to 5 million, for 700 FICO score, and for a $10 million loan, we need 50% down for 720 FICO score. Okay?
So between 5 million to 10 million, that's 65% loan to value.
We look
Between
like
5 to 10 million.
yeah, if over $5 million loan, they have to have 15 more percent down payment, huh?
Okay.
A lot more
Okay.
down payment. You
Oh,
see
for
right
the
here?
bottom one.
You see right here, $10 million
Yeah.
That's
Oh, for the
50%.
bottom.
loan amount. They have to have 50%
50%
down.
yeah.
That's crazy.
The other one's 35%
You
down.
should take a picture of this job, because it's really helpful when somebody asks you, hey, I want a $3 million loan or a $4 million loan. You need to give them, you need to have 30% down.
Tell them no problem.
Yeah, no problem, as long as they have the 700 FICO score. Okay, the table before is for purchase or refinance rate in term. This one for cash out refinance. We can do for primary resident, own occupied, second home, and investment property. Okay. Also for 1 unit or single family or condo townhouse, the LTV is less, is smaller, because if it's a cash out, if somebody want to cash out up to $5 million, the LTV have to be below 65%. So for the loan I have 4.5 million, the home value have to be 7 million, right? Can you check, Alex? So
What do you
4.5 divided by 7, is it 4.5 million? But you said 4.5 divided by 7. What is the percentage?
4.5 million,
Just divide
Divided
by
by
7
7?
million.
642,800.
That means it less than 64%, 65% LTV. So 4.5 divided by 7, 4.5 divided by 7.
Yeah, 4.5 million divided by 7.
7 million.
By 7 million. Okay.
Yeah, yeah.
That's 0.64.
64%. 64%. 64% LTV. That means it has to be less than 65%. So when we do appraisal for this property, we should have $7 million value for my client to qualify for the 4.5 million. So for this kind of loan, 2 things that's important is the credit score and the appraised value. because these expensive home, sometimes or a lot of times, they are custom built home. It's kind of hard to do appraisal for those because it's hard to find something so similar to it. Sometimes the value is like higher, but the appraisal cannot get something similar to compare. So it's a little bit tough right there. The appraisal is an issue when we do this kind of loan. But as long as your client have the credit score over 700, you got it. You got the loan already. But one more thing. So the other thing is the appraisal. So what might happen is if the appraisal doesn't come at 7 million as we expected, we might need to lower the loan amount for the client, and that, of course, the client might not like it, but our loan amount depends on the appraised value. Okay, so for loan amount up that somebody want to cash out $10 million, the maximum LTV loan to value is 60% only. So 60% of 20, what is it? 60% of 20? Can you just like get me 60% of 20 million? 0.6 times 20 million.
So 6% of 20 million.
Yeah.
1.2 million.
1.2. That means 12 million. So if somebody have a home with the value of 20 million, we can cash out for them up to only 10 millions. Okay, even though it's less than 60%, but because our loan amount here is capped at 10 millions. Okay, so we can only offer them $10 million loan amount if their home is 20 millions. Even though we know that we can go up to 60%, but our loan amount is capped at 10 million. Okay, so when it come down to cash out, you see the loan to value. That means the LTV gets smaller and smaller. Like when it comes to 2 to 4 units, if somebody want a $10 million loan, they can only go up to 45%. But for the foreigner, they can get more. Look at the foreigner. The foreigner can cash out up to 55% loan to value for this super jumbo loan. Okay? So this is a good loan. Okay. So the highlight of this program is it is for self-employed, so business owner. It's for business owner, okay? If somebody earn W-2 income, it's okay, but it's harder to do W-2 income, okay? We don't need tax return. We don't need to do tax transcript. It said the maximum debt to income ratio is 49%. Okay, for property that somebody buying to live in or for second home, they can get 100% gift fund for down payment. This is really awesome, 100% gift fund, right? Hello, Sully and Andre, awesome. Good to see you. Business funds allow for borrower less than or equal to 100% owner of the business account. Meaning, for people who don't own the business 100%, they can still use the fund of the business for the down payment of the property. Okay, but of course they have to own it over 25%. Okay, that's the highlight. So, non-warrantable condo restricted. That means for condo that not warrantable, we cannot do it. Okay, so for primary resident, we can do. Well, let's see. Okay, they offer interest only. Okay, normally for a conventional loan, we have to pay principal and interest. There is no option for interest only for conventional loan or non-conventional loan. But for this super jumbo, they offer interest only. That means the monthly payment will be a lot less. Because normal, right? The monthly mortgage payment include principal and interest. In this case, the lender allow the borrower to pay interest only. the principal will be staying there. The principal will never go down.
Principal remains the same.
It's remain the same. For example, if somebody borrow a $5 million loan, that principal stay there. Every month, the borrower only pay interest only. The monthly payment is less. Okay. Of course, people don't want to do it that way because they feel like their principal will never go down. Okay. Okay. But when they do interest only, their loan to value is lower. Look, maximum loan to value only 65%. If they pay principal and interest both, then they can do only 30% down payment. But in this case, because if they want to do they want to do interest only, they have to do 35% down payment. And minimum FICO score is 720. So the requirement is higher. Remember in the previous table, if somebody paying principal and interest, they only need 700 FICO score and 30% down payment. In this case, the LTV is lower, the credit score is higher. Same thing with cash out. When they want to do interest only, the LTV is lower, then higher. The credit score is higher. Now they ask for 740 credit score. Okay, and it restricted to only 1 unit property. So primary resident, 1 unit property. And in this case, the foreign national is not qualified for interest only. Giờ chị thấy nóng không? Dạ mở cái máy lạnh. Trời da nó còn mặc áo lạnh nữa chứ. So Sully and Trace, you come in, and Man, you come in late. Just let you know, I know you come from far away. Thank you for joining. So super jumbo loan is loan amount $1 more than $3 million. So at over $3 million loan amount, up to $10 million. Okay. And for this super jumbo loan, we don't need to provide tax return and W-2. Okay. We will talk about what document we needed later on. Okay. So for all kind of loan, if you ever do conventional, non-conventional, super jumbo, any kind of loan, remember one thing. When you buy second home, it has to be 1 unit. It has to be 1 unit. Second home cannot be a duplex. Second home cannot be a triplex. Second home cannot be a fourplex. For example, somebody buy a duplex in Lake Tahoe. That cannot be considered second home. It is investment property. Even though if that family will use it as the second home, but lender will not give them a loan of the second home, but a loan of the investment property. You keep this in mind because sometimes we go get the loan and they say, oh, I bought a two unit in Lake Tahoe or in somewhere. Can you do me a loan as second home? Because we're going to use it as second home. And if it's a duplex, and you might forget. Because that's reasonable when you buy something somewhere like Lake Tahoe as a second home, right? But by the time we submit the loan, we say, hey, this cannot be second home, this has to be investment, then you're in trouble because you quote them the rate for second home. It's very different. Okay?
Even if you live on the other unit?
Yeah. As long as, if they buy it as primary resident, if they buy a primary resident, that's the primary resident. You have to live there 100%. If you live in the 1 unit and you rent out the second unit and you live there every day, then that's considered owner-occupied.
Even if you're renting the other one?
That's that even you rent the second unit out, you live in one, you still consider a primary resident. Okay. That's different. Okay. But somebody buy the property somewhere else and say that second home, it had to be 1 unit. Okay? 1 unit. Keep this in mind because it's really easy to forget. Really easy to forget. Yes?
So Jennifer is asking, what about a property with an ADU?
Oh, a property with an ADU. I don't know about that yet. I can search for the answer because it's also the second unit, right? Good question, Jennifer. Very good question. I'll ask. Is ADU considered a second, like 2 unit now, Nguyen? No, it's still considered 1 unit.
This one more aggressive.
For example, we have the permit, right? We have a single family home and we add the ADU. I think it's still not considered 2 unit, right? Because when we quote the rate, we still do the 1 unit rates, right? So Jennifer, for right now, I think with the guideline right now, it's still 1 unit, even though it have an ADU. But 1 ADU, not 2 ADU. Okay, normally, oh yes, Sally.
Unless when they obtain the permits, if they registered it, if it's an R2 zone, and if they registered it as a duplex, then it could be considered 2.
Thank you.
Otherwise, the ADU is still an SMH.
Awesome. So Sally is saying, if they register the home, they get a permit, an ADU, just an ADU, not the zone what R,
R2.
not zone R2, then it's still 1 unit. If they register at zone R2, then it become 2 unit. Zone R2 is 2 unit, and when it's 2 unit, we cannot buy the second home. Thank you, Sally. Let me think. I think I want to say something too.
So, Chau, we still can count the income of the ADU if the we can do that loan. Can the income of the ADU be considered?
Okay, if you consider the income of the ADU, then it becomes investment. So if you say it is a second home and owner occupy, no income. There's a lot of situation. Good question, Jennifer. There's a lot of situation when my client, they live in a house, right? And they share a room to someone and they charge the money like $1,000 a month, and they file that in their tax return. Like every month they earn $1,000 from the person who share a room. But because this home is considered owner-occupied home, when I do the loan for my client, I cannot use that $1,000 as income for the loan, because at the moment I said to my lender, this is the owner-occupied. That means this property cannot produce income. If we say that property we bought, if there's a home and a ADU in it, at a second home, we cannot use any income from the second home, because second home is not income producer property. Okay, good question. Awesome question. Okay, so investment property, maximum $5 million loan amount in this case. Purchase and refinance rate in terms 65% LTV. This is very detailed. You don't have to remember it. Okay, so bankruptcy, 3 years from discharge or dismissed. Okay, do you are you familiar with dismiss and discharge? Bankruptcy. Okay, so somebody, if they dismiss, that means they file the bankruptcy and then they decide to cancel it. That means they dismiss what they do. That means I don't want to file bankrupt anymore. So that's called dismiss. So it has to be 3 years after they dismiss. Or discharge, meaning they file the bankruptcy and it's complete. The bankruptcy go through the process and it's complete. The day that complete is the discharge date. So the 2 different dates, discharge or dismiss. Discharge, we file the bankruptcy and we complete the process of bankruptcy. We have the discharge date. It's important date because we have to look at when is the discharge date occur, and then 3 years later we can do the loan for a client. Or the dismiss date is also important. Okay. If somebody have a foreclosure, we also look at the date when it complete, because we normally it in the credit report. In order to find this information, we have to run credit report and we find the complete date of the foreclosure, and we have to add 5 years into it. Like if somebody have a foreclosure in 2015, now it's like 6 years over.
Over
We can
6
do
years.
we can do loan for them now, right? For a super jumbo. Somebody have a bankruptcy in 2018. So for example, June 2018, June 2019, 2020, in June 2021, and now we already July, so it passed 3 years, we can do the loan for them. Okay. For someone have a short sale, it need to be 2 years from a completion date. You know, short sale, people sell the home with the sale price less than the loan amount.
Yeah.
You know that, right? So those people, they have to wait 2 years after the date they sold the home to sell it. Okay. Restructure or modify loans. Season at least 24 months, meaning 2 years. All payment must have been made on time and all time. So what is restructure and modify? During 2020, there are so many people in forbearance. You know that, right? And a lot of them, they restructure their loan. Why? For example, somebody cannot pay their mortgage since April 2020 until now. How many months? More than a year. And if they have to make payment to all of the missing payment, I think that's a lot of money. And a lot of people cannot afford to go back and pay all the missing payment. So what they do with the lender restructure their loan. They restructure. How do they restructure? They say, okay, instead of you making all the payment now because you can't do it, we will extend your loan because you missed, like, for example, you missed 15 payment, right? Now you start making your first payment, but your loan was supposed to end in 2050. Now we add another year and 15 months into it. So you will pay, now you start paying your mortgage, and then your loan will be paid off instead of December 2050 plus 15 more months, the 15 missing payment. So they restructure the loan. So somebody want to do this kind of simple jumbo loan, but in this case, for example, they already restructured the loan 2 years ago and they've been paying their payment. Even they never paid the 15 missing payment, but they've been paying every month after they no longer in forbearance. When they get out of forbearance and their loan is restructured, they start paying it. Okay? Modify also the same kind of restructure, but I think it's different terms, different condition. Okay? So for those people who were in forbearance in 2020 and they restructure their mortgage, they cannot do anything until 2 years later. So those people are gonna get stuck for 2 years. Okay. Now we talk about income. This is the most important part. So for W-2 income, it's really hard to do because W-2 income, the lender will require a written VOE. In a written VOE, the HR will have to fill out the income of the last 2 years and the income of the year to date of the borrower. Will that income supporting the loan that we offer our client? It's hard because W-2 income is have a certain number, right? For this kind of loan, 3 million, 5 million, 10 million, the income had to be a lot. Okay? So I think W-2 income is a little bit hard to do. But for self-employed income borrower, like all the business people or business owner, dentists, doctors, or all kind of business owner, it's very easy to do this kind of loan. Even anyone own a restaurant or own any business, it's a much easier to do this loan because what we need to submit is a 2 year of business license. And some business, they don't require business license. We have to document some kind of document showing that this business is in business for 2 years. What can I do for you? Someone? No? Okay. So the first thing is business license. The second thing is this a letter from a CPA. The letter showing the letterhead the address, phone number, and the license number of the CPA. Okay? The letter must also document the following things. Okay, document that the CPA has either prepared or reviewed the most recent 2 year of business tax return. So the CPA doesn't need to be the one who filed tax return for the client. For example, I apply for this loan, right? And I used to go to Josh to do tax for me. But Josh is not available at the time I do my loan. I can come to Alex, another CPA, and Alex will look at my last 2 years tax return, and he can write a letter for me. As long as he say that he reviewed the most recent 2 year business tax return for me, he signed his signature there, and he put his license number as a CPA, then that letter is okay. Yes, Sully.
Excuse me, what are they reviewing for? What should the letter state? I saw it, I reviewed it, the documents are approved, or what is it that letter should say?
In the letter, he will state that the business owner owned the business over 2 years or 5 years or 10 years, whatever it is, and what is the percentage that she or he owned of the business, and also he will have to create a P&L for the client, for the borrower. So besides reviewing the last 2 year tax return, the CPA also create a 20, right now, if we do it, it's a 2020 P&L and a year-to-date P&L. Okay?
Based on the documents that he's reviewing?
Yes. We don't submit the tax return, but we only need a letter stating this business owner owned this property for how many years, and own 100% or 75% of the business. And then the CPA would need to do a P&L for us. Okay? And in the letter, we also need the business name, borrower name, percentage of business ownership. So that pretty much what lender need. That's it. That's all they need. We don't need to give them more. When lender needs something, this is a secret. Give them exactly what they ask for. Never give more. Because at the moment you give them more, you create problem. Because they say, hey, what's going on here? And they will ask questions, right? So just give them exactly what they ask for. That's how we do condition here. Okay. Oh, we go back. Okay, let me see. Andrew, can you read for me the first one?
Yeah. Verification of the existence of the borrower's business from third party, such as a CPA, CTEC, or EA, regulatory agency, or the application licensing bureau. CPA, CTEC, or EA must be the individual who files the business taxes. And verify the listing and address of the borrower's business using telephone book, internet, or directory systems. Okay, thank you, Andre. So, verification of the existence of the borrower business from a third party. So, so the CPA is actually verify the information for the lender, okay? And sometimes the lender asks us to go and find the business information online and print it out and send it to them. They want to see like the website or phone number, something like that. Josh, can you read the second one?
Verbal verification of employment is required for all borrowers. Salaried and commission income, verbal VOE within 10 business days prior to the note date. Self-employed income, verbal VOE within 90 business days prior to the note date.
You don't need to read the last one. Okay, so when we submit the paper, the income document, like the letters from the CPA and the P&L to the lender will call the CPA to verify the information that he provided. Okay, so when it happened, within 90 days, so we don't know when. So when the CPA help us to do the P&L and the letter, we have to inform him that someday my lender will call you to verify what information you just provided to us. Okay? And for people who earned W-2 income. If we submit the written VOE, the written VOE is a written verification of employment. In that VOE, it has the last 2 year income and year-to-date income. The lender will call the HR to verify the income in the VOE with 10 business days before, I think before they sign loan docs or something like that, right, Elisa?
What is CTEC and EA?
I'm sorry?
What is CTEC and EA?
I'm sorry, I don't know. Can you search it up?
EA?
EA, what is EA?
Enroll agent.
Enroll agent, I think. And how about the CTEC?
California tax. I forgot the
California tax.
California tax something.
Tax,
But EA is enroll agent and CTEC is California tax. I have no idea what EC. Enroll corporation? I don't know. I don't know. Okay, we can go next. Okay, so how about money? This is my favorite part. When we read guideline, there's so many things. I drop off everything else. I just put this one in because reading guideline can be tricky. Because if you look at the wrong, like not wrong, because they give you option what to submit, and if you look at something else, it might be so hard for your client to provide to you. But you look at the right one, it's so easy for your client and for yourself. So look, I dropped off a lot of things on the top already. I only put this part in, but it's even with this part, it's still confusing if you don't know what it is. For example, they say you can submit bank certification documenting current balance, or 1 month bank statement, or VOD, or bank prepare and stamp 30-day transaction history printout. So for the one month bank statement, it might create condition because client might deposit thing that we don't know which one lender gonna pick on and ask, right? So we don't want to submit 1 month bank statement. The VOD, verification of deposit. First of all, the verification of deposit normally tell us the average deposit of the last 2 months. And if the average is not, because sometimes the average come out as not we expected, because sometimes client just deposit a large amount of money into the bank and it show, and that's no good. It might create some condition. Okay, so even the bank prepare and stamp 30-day transaction history, we don't want to provide them the whole 30-day transaction history. That's even more condition. So I look at the first one. It's the most easy one. The client go to the bank. All they ask the bank is a letter stated the current balance. For example, we need $500,000 for down payment, right? And the client has $600,000 in the bank. All he needs is go to the bank, asking the bank to say, can you give me a letter just stating right now I have $600,000 in my bank? That's it. And we only need that one letter to submit to our lender, and then no question. Because lender say, oh, you need $500 down payment, and then your bank statement shows $600. I don't have any questions. That's the most easy one. So we can ignore the rest. We only pay attention to the first one, okay? Okay, reserve requirement. So for this cut alone, we need to show reserve, okay? Okay. So for loan amount with LTV less than 60%, that means they have 40% down, and then loan amount is less than $5 million, we need 12-month principal and interest reserve. For example, that means that every month this client have to pay $3,000 for principal and interest. Okay, principal and interest. 5 times 12. What is it? 75,000.
36,000.
6 something.
36. 3,000, you know?
Times 12.
Yeah.
36,000. So
They should fly.
so the 36,000. So the client have to show in the bank account. For example, this is a purchase loan. After the down payment, the client have to have money reserved for 12 months.
12 months.
What does it mean? Like, lender doesn't want a client put down the down payment, all the money, and then after that have no money for to pay the mortgage, right? They want to see the client still have 6 months of mortgage payment after the down payment and the closing costs. Does make sense? Because because this loan, they don't look at the tax return. They don't look at the real income. They have to make sure our client have the money to pay monthly after they moved in the house for at least 12 months. But for people who have less down payment, because the LTV is larger than 60% and their loan amount is larger than $5 million, the requirement is higher. They need to have 18 months of reserve of principal and interest. Okay? Stock, bond, mutual fund, if they have those accounts or they have net cash value from life insurance or they have like 401k, we can use 100% from that account as a reserve funds. So if they don't have the reserve in their checking or saving, they can provide us one of these documents to show they have the money. So that's easy, right? Gift fund. Gift fund is allowed for owner occupied and second home. And it can be 100%. Okay? The donor must be blood or legal relative, a fiancé or a domestic partner. Okay? This is not allowed for investment property. So gift fund is only for owner occupied. Any questions? Okay. So we done with the super jumbo. Any question? So the super jumbo is actually really similar to the no docs loan, everyone. It's just bigger loan amount.
What is the estimate rate for the super jumbo?
Okay, good question. So for refinance cash out, 64% LTV with credit score 750. Cash out refinance, a single family home, owner occupied, rate is 4.875% for 30-year fix. Of course, client have to pay point and cost. Good news for people who borrow $10 million, your origination fee is only $30,000. Oh my God! What kind of loan is this? $30,000 for origination fee for a $10 million loan? Come on, this is so cheap. Honestly, it's so cheap. For people who want $8 million loan, $5 million loan, come on. $30,000 origination fee, periods. So cheap, guys. You offer this to the people who need it, they will love to work with you right away. Tell them upfront. Doesn't matter, your loan $3 million, $5 million, $4 million, $6 million, $10 million, I charge you only $30,000 for origination fee. Only $30,000 for origination fee.
Questions?
Yes.
There's 2-year repay penalties. What's the penalties?
2-year prepay penalty for only investment property, and it normally 4%
4% of the loan amount.
of the loan amount. Yes. So they better keep it because the rate is so low.
Only for investment? What about
Yes.
primary?
For the primary, I think they don't have to keep it 2 years. There are no prepayment penalty, but normally they have to keep it like 6 months. 6 months. Yeah. So honestly, you guys, when I talk to my client about, hey, I only charge you $30,000, they are so happy because they get us $4.5 million loans, $6 million loan, $8 million loan for only $30,000 origination fee. And the closing cost is like $3,000, and they might have to do 1 or 2 appraisal. It's like, I think the whole thing less than $40,000. The point and the cost less than 40,000 for a loan of 5 million, 10 million. This is the cheapest loan. I don't think anyone else offered this. Only we offer this. Because we don't need to charge them more. We're here to help them to be more rich. How about that? Make people more rich. And the rich people need this loan. They need this loan. Because you know why they need it? Because right now, without this loan, they go somewhere else, they pay 7% interest rate or 8% interest rates or more than that, or even 10% interest rate with huge loan amount. You think about it. And those hard money lender loan, they don't charge 30,000 for a $10 million loan. They charge 3% for $10 million loan. Think about 3% of $10 million. How much is it? Somebody else even charged 3.5, 4%. I've been talking to those lenders many years. They charge like that. Hey, 3%, 4%, 3.5%, and rate 7, 8, 10%. We offer a rate about 5% for 30-year fixed, by the way, and we charge $30,000. Oh my God, like nothing compared to those guys. Compared to those guys, we charge nothing. And our loan is 30-year fixed. And for the hard money lender loan, they give them the loan like 12 months, 18 months, that's it. After that, the client has to come up with the money to pay off the loans. So that's why they keep searching for a lender to refinance. Every time they refinance, it costs them a lot of money. And here, when they work with us, they only pay us $30,000, that's it. And they can keep the loan 30 years, done. This is the best loan for super jumbo for the people who need it. So we have diamonds in our hands. All we need is to let the whole world know, hey, I have diamonds, just go get it, right? The rich people, they work hard for their money too. They don't want to spend 3% point for the $10 million loan. They want to pay us $30,000. They be so happy, here, $30,000, get it done for me, right? That's what they do. They really appreciate when you talk to them about these products. Trust me. So we talked last week about the no-doc loans. The no-doc loan, look, the loan amount up to only $2.5 million loans. See that? So the no-doc loan is a different product. It's similar, but the loan amount is a lot less. So but also the rate for the no-doc is also really great, right? It's like 4.5 right now or 4.375. So when you go, you're good. So if you go out and you talk to your client about no-docs or super jumbo, they are almost similar, but the no-doc loan, the loan amount less than 2.5 million, but the super jumbo is the loan amount is $1 over 3 millions. So you can serve two markets, the market with the lower loan amount and the market with a super huge loan amount, okay? And both products are awesome. It's really awesome. Yes, ma'am.
I'm sorry, I look at this one. This one is no doc, the original no doc. So
This is the no-doc loans that someone have no house. The first time they go buy a house, all they need is 700 FICO score. And if they borrow a loan up to 1.5 million, they need 30% down payment only.
That's why I'm asking 70% LTV. Okay.
70% LTV, that means 30% down.
So the repayment fee still apply for primary and also
Yes, for this one, right? For this one, 3-year prepayment penalty. 3 year, yeah. 3-year prepayment penalty, okay?
What's the rates on that, geez?
About 4.3, 4.5. Because the loan amount is smaller, the rate is lower. It's really good right now. The rate is so good right now. We can do refinance cash out for people up to $2.5 million. So that is the one who somebody have no property, never have a rental property. So this is the no doc with somebody have no previous experience as a landlord. But this one is with someone called investor. Someone have experience renting a property before. Then the down payment is less. Only 20% down payment for a 700 FICO score. The rate is about 4.3, 4.5. So this one for somebody have previous experience of landlord.
What's considered such experience?
Experience meaning somebody already rent a property. Like if somebody come to you, right, and say I own 2 property right now, then you know exactly this person qualify for this program because 2 property, of course, he had to rent 1 out, right? So he have a renting experience. So he qualify for this program. If he want to buy another property, he only need 20% down with his 700 FICO score, right? So this program is easier than the previous program. The previous program is a NEVA because somebody have no experience as a landlord. This one easier. So with somebody with lower credit score, all they need is to put more down payment, 25% down. Much easier than the other one. So you guys have the no docs, you have a super jumbo. I hope you guys can bring some loans home. Yay! So any question before we stop? No questions, because you all know what it is.
Well, it looks like we have the products, for certain borrowers.
Yes.
It's just a matter of like how do we reach these people that will need this
Yes.
loan.
Before the super jumbo, I'm telling you, I have a hard time because my client want more than $3 million loan. The no doc doesn't satisfy him. I contact at least 5 different lenders. They couldn't do the loan for me. And those are, they always say, I can do any loan for you. But when I have a $4 million loan, I come to them, they say no to me. 5 other lenders, they say no to me. I spend so much time talking to them. But now we have it. Unbelievable. We have it in our hand. So you have the whole market. You have a big loan market and a small loan market. You have the whole market. You can go and sell. You can help so many people. Imagine if I cannot help my client, he paying tons of money monthly for the private lender.
Yeah.
Imagine $4 million loan with 7 or 8% interest rate. That's a headache, right? And now we can offer him like about 4.8 or 5%. He's so happy. And a 30-year fix. Oh my God. It's really awesome. This is the best products. And I don't know how long this product will be available. Honestly. These products, they don't last forever. So if you can go and get the client right now, they'd be happy. Because when this gone, it's gone. Okay? So this is the best product. So to me, all the investor, all the people who want to invest right now, if they know these 3 products, they'd be so happy. We have another product. We talk about it next week. Make people even more happy. So we just keep making people more happy. Okay? So that's our job. To make people rich and happy. Right? Right now, what we have to talk about it. Because honestly, when we don't talk about it, people don't know. I understand a lot of people looking for something. They don't even know it exists or not. So please, on your show, talk about it. You guys can talk about it too. Hey, you know what? My company have a no doc loan program. It's awesome. All you need is 700 FICO score and 30% down payment. Call me. My loan manager would love to talk to you guys. And then you guys can bring them over here. I'm here from Monday, Tuesday, Wednesday at 2 p.m. Just let me know what day I will sit down with your client. We go over all the options because when I talk to each client, I know which is the best for them. And I will get them the best loan products and give them a house. I talked to one of my clients. He called me a few days ago, right? And because he found me on Facebook or YouTube, something like that. And he asked me, he said, I've been looking for home, and every time I got a home I love, my lender keeps saying no to me. They say I'm not qualified. He business owner. And I said, you know what? Let me run your credit. I'll let you know if I can do it for you. After I talked to him for 5 minutes, I run his credit. Actually, you run it for me. I call him. I said, I look at his bank statement. I see his money. I say, now you can go buy a home. Just give me, let me know when you buy a home. I give you the pre-approval letter, and I'll get you the loan. He said, wait. Is it that simple? I said, yeah, that's simple. And he connect me with his agent. And he in contract yesterday. He's so happy. He said, how come you make things so simple and easy? I said, because the program is so simple and easy. I don't want to make it harder for you. And he said, oh my God, my kids are so happy. We get the house we love. I asked him how many children he has. He has 3 kids, 14, 16, and 8. And the kids love the house they buying. And then yesterday he gave me the contract, and I say, okay, I'll close the loan for you within 4 weeks. So he said, so I'm gonna get my house within 4 weeks? I said, yes. He said, that's simple and that's easy? He didn't give me any tax return, W-2, none of that. All his bank statement, and I run his credit. I make him so happy. He's a business owner, he worked hard, and now he deserves it. Beautiful home. He bought a home, 2,600 square feet, 4 bedroom, 2 bath, for a family of a couple and 3 kids. Beautiful and perfect. Nice home, big backyard. He's so happy. So, this product make people so happy. Go and help people. Help them. They deserve it. They work so hard. They save the money, but then nobody accept the loan. That's insane. We can do it for them. You have the whole market, guys. Go talk about it every day. Say, hey, you know what? If somebody have a problem with getting your loans, we can help you. Come and talk to my loan manager. All you need is 30% down. You just go talk like that again and again and again. You get somebody calling you. Somebody gonna call you. Trust me. And talk about it a lot. Because when you keep talking about it, they remember you. Okay? If you do one time, people forget. Okay? So I hope this training will help you to make a few sales. $5 million sales. Okay, thank you everybody. I'll see you next week.
Thank you.
Thank you.